Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence. How's it going, everyone? It's Sam. Michael Saylor just said that they're buying Bitcoin. Let's actually roll that clip. Then I also want to go through what Tom Lee just said as well. Some people are saying that, he definitely regrets BMNR, but he has something to say back. And he also goes on CNBC to talk about this pullback. He also goes through some of his favorite investments right now, what he's buying with his ETFs, and what he thinks is a good value right now, and kind of what he sees in the future. There's some things I definitely agree with, some things that I push back a little bit on this video, but we'll show both those clips. I'll talk you through it. We'll see what the broader market looks like. Bitcoin's jumping a little bit right now. We'll talk about that too, and kind of how I view this right now. Before we get started, if you want to join me on Telegram, I've linked to it underneath the video. You can join me there just in case I get kicked off of YouTube, because that has happened to me in the past for 7 days, and that's been happening with more people. Also, if you want to trade crypto, there's a link underneath the video. You can start trading over on BYDFi. And in the Telegram, there's actually a link to join our whale chat where I talk with other people that trade a decent amount. We were chatting in there today about the market, so check that out. But if you want to join BYDFi, we still have about 1 day left on this trade and earn event. Basically, you can get up to $10,000 worth of Bitcoin for trading on the platform. And we're going to do this in the future too. So if you want to get in on this, you automatically start participating when you use my link, and you get it deposited directly into your account. So check that out underneath. As we can see, Bitcoin fell below the 50-week simple moving average. Hopefully we pop back up before the end of the week, but we'll see. Obviously, there's been a lot of fear, which we talked about in the video earlier today. I kind of go through why we're falling, but it seems like the market's bouncing a little bit. You can see like in the pre-market, the NASDAQ was down 1.4%. Now it actually popped up to be positive a little bit, and Bitcoin's moving up a little bit as well. It bottomed around 94.5 and it went all the way up to 97.3. Now come back down to 96.4. Now, a lot of people were reporting that our Arkham was saying that MSTR sold, right? They cut Bitcoin holdings by 47,000, and they didn't. I reported this in the last video that that's not true. They just transferred it somewhere else. They moved it to a different wallet. This is actually what Michael Saylor said today. I want to play this to you because he was on CNBC. I love when he talks when there's a dip more than anything. So let's see what he has to say.
Founder and executive chairman, good morning to you. What do you think? 150 by the end of the year? What do you think's happening here?
I think we all want to go to the moon, but if you want to ride the rocket, you got to be prepared to pull the G's. Over 5 years, Bitcoin's had like 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting around 68,000. And then after the Trump election, we had this incredible rally from 68 to 106,000 in 5 weeks. If you go back 14 months, we were about 55,000. And so if you'd said we're going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations.
Yeah, like you zoom out and you realize that Bitcoin's still up a lot, just not over the 1 year or a year-to-date time frame. But you go back 14 months, 16 months, 2 years, 5 years, and it's up more than every other asset still. It's going to have these drawdowns that we've seen 3 of them throughout the bull market even.
For 5 years, Bitcoin's up about 50% a year on average for the 5 years. Gold and S&P are studying the cost of capital at 14%. My company's strategy is up 71%, equivalent to NVIDIA. There's no other stock in the S&P that's done any better. So I think the volatility comes with the territory.
That's crazy because MSTR is down a lot right now. From the peak, it's down to $202. It's down, like 60% from the peak? I'm trying to see around this. 56% from just 4 or 5 months ago. And yet it's still on pace to be the best company in the S&P 500. That's crazy.
If you're going to be a Bitcoin investor, you need a 4-year time horizon, and you need to be prepared to handle the volatility in this market.
So when you look at the price right now, and then we'll talk about the implications for strategy, but when you look at the price right now, what does the upside at this moment look like to you, and what does the downside in this moment look like to you?
I feel like we put in a pretty strong base of support around here. There's an incredible amount of leverage coming out of the system, a lot of liquidation. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I would think that we'll build from this base and we'll rally from here. Obviously, it's hard to make a forecast for the end of the year right now, given what's happened over the past few weeks, and especially the shift in the macro environment. But, as you know, my view is Bitcoin's going to outperform gold. It's going to outperform the S&P. It is digital capital. And so if you're a long-term investor, this is the place to be.
Now, I am pausing this a little bit because I wanted to make sure that YouTube doesn't cancel this video or give me a strike for it by just playing this too long. But something interesting, like we were lower this year. It's crazy to think about, but we went down to 74,000 this year. I know that was a while ago, but 74,000 was our bottom this year, 74.6, somewhere around there. And we're still $20,000 above that, $22,000 above that. So if we set a low here, this is just once again a higher low after a higher high. I don't know how anyone looks at this and says, like if we bounce back up to 100, 105, 110, I don't know how anyone says, oh, this is bearish, right? We've just been going up and to the right for 3 years, setting higher highs and higher lows. But let's get back to what Michael Saylor says here.
In terms of the way your fund is structured and the debt that you've taken out to effectively buy Bitcoin, what are the trigger points, just so people understand the full risks involved for you, in terms of some of these preferreds and other things, in terms of where Bitcoin needs to lie, either on the low end?
Well, it's pretty important to note that we're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable. The company's strategy, just like an intelligent bank, would be to build amplification for the common stock using preferred equity. So the equity never comes due. It's a dividend payment declared by the board. It's not a coupon. We can't be in a default. There is no credit default situation from the digital credit that we're selling at this point.
I was curious if you could comment on something we heard from Cathie Wood last week. She has a target, I think by 2030, she had it at $1.5 million a coin, and recently suggested it might actually be closer to a 1.2, which is still pretty remarkable unto itself. And yet, when she explained her new rationale, it was actually that stable coins, the sort of emergence of stable coins and the growth of those coins being used for transactions, she argued could ultimately crowd out some of the use case for Bitcoin. What did you think when she said that?
I think the entire digital assets economy is exploding and growing in a bunch of different dimensions.
I think so many people want to hear that $1 million by 40 years from now. Like, the fact is, we're running out of that time period. Like, people were saying that back in 2021, and now we're halfway to 2030, and Bitcoin's still under $100,000. So it's going to be very difficult unless we really get that takeoff moment. It'll be more and more difficult to hit $1 million in 40 years, basically. Now, I'm not saying that's not going to happen, but you look at what we did this cycle, right? Like, let's say we top at 180,000. Let's say we go up 50% above where we just topped out at, and then we go into a bear market, and then we continue on. That was basically a 3x then since the previous cycle. Now, if you dollar cost average, you would have gotten more than that, more than a 3x. But let's say we 3x again, then from 180 to 540, we don't even get lower returns. Well, that's still $500,000 as opposed to $1 million or 1.2. So I think, people like the price predictions, or maybe used to like them more. Just know that this is going to outpace other assets over time, or it has in the past. So that's why it makes sense maybe to put a portion of what you're investing into Bitcoin. That's one of the reasons. But I think that's just something to consider.
Right now, the way to think of it is that half of the economy is built around Bitcoin. It's digital capital. Bitcoin is digital gold. And the killer application on top of digital capital is digital credit. Instruments like Stretch, STRC, credit instruments that pay yield. And that's a very simple business. The other half of the economy is digital finance. And it's going to be built on the proof of stake networks that are emerging, the Ethereum Solanas, the BNBs. And the killer application for that part of the digital assets economy is tokenized currencies, a la stable coins, tokenized securities, tokenized real-world assets, tokenized brands, and DeFi in general. Well, that's a very complicated technical development, and I'm sure that stablecoins are going to go from hundreds of billions to trillions of dollars, but it's not really competing with digital capital. No rich person wants to buy the currency instead of an equity or a real estate or a capital asset.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
They have bought very small amounts over the last, I don't even remember how long, like a couple months, maybe 6 months. They had their biggest buys a year ago when Trump came into office, which they're still up on, I believe, before Trump got into office, but when he was voted in after the electoral vote. So it'll be interesting to see how much Bitcoin they actually buy. I think they've been buying, 100, 500, maybe 1,000 here or there, but keep in mind, they used to be doing $30,000, $50,000 Bitcoin buys every week. So it'll be interesting to see how much they buy now. I don't think they're going to be able to really sell a lot of equity in MSTR. They're not going to be able to raise capital to go buy Bitcoin that way as much because they're not even selling at a premium anymore. So they're going to have to use these other vehicles. Maybe they get, a couple $100 million, maybe $1 billion or $2 billion through that if they really push it. But I don't see a world where we're going into a bear market and they're going to be really accelerating with bigger purchases because strategy itself isn't selling at a premium anymore, and that's their biggest lever to pull to buy a lot of Bitcoin.
But no, that's interesting though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you were buying it at both. If you were looking over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about $74,000 a coin. The point that I would make for any investor is if you have money you don't need for 4 years or longer, and if you don't trust anybody, you want no counterparties, you just want to own a piece of the global digital economy, you buy Bitcoin.
All right. That's a good point. I mean, I've said that in the past too. Like, don't buy Bitcoin with money that you need in the next 6 months or a year or 2 years. Like, buy it and hold for 4 years, and you'll probably be quite happy. You've never bought and held for 4 years and been down on Bitcoin. And with the higher risk portion of my portfolio, I do use leverage. That's something that feels bad now. Like, people feel bad because I've been seeing portfolios that are like $5 million that have been liquidated. I don't know if they're just trying to farm engagement or not, but first of all, if you ever have life-changing money, take profits. We took profits the entire bull run. And keep in mind, if you're using leverage, it should be a small portion of your portfolio. That's something I always say too. But of course it's going to feel bad when we're down 30% and you're using leverage. This is the part that balances out all the good, all the crazy days where you make huge gains using leverage. So you have to use it responsibly, right? Just like if you had bought Bitcoin this entire time, well, some people feel bad that they bought Bitcoin at 120,000, 125,000 when they could have bought it at 96,000. So just, don't put in so much that you get super stressed out, and make sure that you can continue to dollar cost average or continue to trade because you have some cash on the sidelines. Let's also look at Tom Lee. Someone said, I'm 100% positive Tom Lee regrets BMNR. There was no pressure to make sure a specific crypto performed. He was chilling, just talk about overall markets. And Tom Lee says, wrong. ETH is a super cycle. Let's see what he has to say today.
We've talked a lot over the course of the last several quarters and maybe even multiple years now about the secular bull run in technology. Is it over?
I think we should expect from time to time profit taking because tech has been a leader for the last decade, and it is overbought. So I think it is going to be from time to time going to show extended weakness. But to me, the underlying story driving technology, which is the productivity miracle coming from AI, is still intact. Mary Erdos even talked about this earlier this week from JP Morgan that there's been a payoff in spending, and Lisa Su at AMD as well as noting that productivity lift is the reason AI spending is rising. That's actually still a tailwind for tech stocks.
It's crazy that we even have to talk about whether a pullback is normal. I mean, the QQQ, which is down more than the S&P 500 from the peak, is down 4%. I've never seen a more fearful market when it's down 4% from all-time highs and still up 20% year to date. Like, how can anyone be fearful after that kind of move for a year? And I do think part of it is just that people wonder if the AI rally is going to continue and how much of it is built on true earnings potential in the future versus just like these companies have a lot of money and they're trying to throw it somewhere. That's something.
Follow up. You manage funds now, especially an ETF that's heavily tilted in some ways towards some parts of that kind of technology, media, and telecom trade. Has anything changed with regard to the price action or the fundamentals that have taken some of those names perhaps out of your portfolios?
Dom, we just actually did a rebalance for the Granny Shots ETF, our large cap fund. We still actually have about 40% exposure to tech. It's about a market weight, but to us, the visibility and the spending is still very strong, and names like NVIDIA are still reasonably priced. I mean, NVIDIA is at 28 times forward earnings is still less expensive than buying Walmart or Costco. Costco is almost 50 times forward earnings.
All right, Ross, with that in mind.
Now, I know people like to compare NVIDIA to Costco or like some of these higher, more expensive names that are growing slower. But also, Costco is a lot easier of a company to project future earnings. So there's just generally a lot less risk in people's minds. So that's why it gets a 50% premium when it's growing, a third as much.
As you watch the price action play out, does it surprise you at all that we've seen this kind of a sell-off? Could we expect more of this in the coming weeks?
I don't know if we'll get more of it, but investors should expect more of it. I mean, if you look even at the late 90s, during the heyday of the dot-com bubble, 96, double-digit sell-off, 97, double-digit sell-off in the NASDAQ, 98, big sell-off on LTCM and some other weakness, and then 99 even, big sell-off in the NASDAQ. So double-digit sell-offs, even in bull markets driven by new technologies and exciting new technologies are really common. And this one, is just par for the course, I think, amid a broader bull market. So as long as the technicals and the underlying trend isn't too damaged, I think it is a dip you can buy. But I think investors should always expect a little bit more weakness. We've been on a tremendous run off the April lows. That kind of momentum can't sustain forever.
Ross, do you feel as though there is any kind of a case to be made for a possible rotation trade? We've been exploring the possibility that maybe this broadening out could include less AI and tech and more things like perhaps energy or financials, something else along those lines. Does that thesis play out in the coming quarters in your mind?
Sure, and I think it's incredibly healthy that as AI is pulling back, we're getting some nascent leadership from things like energy. Healthcare has had a tremendous month thus far after being really beaten up for a couple of years. Financials, big banks, both in the U.S. and globally, have held up solidly. So, obviously the headline indexes are going to be weighed if big tech sells off, but I think it's incredibly healthy both on the earnings front and on the price front that you're seeing some breadth especially at a time when the question about the broader economy outside of AI is how healthy is it, right? So this is a really good sign to me, and I'm happy to take a little bit of gains from tech and rotate into some nascent leadership there in other sectors.
Tom, the tariff tantrum issues aside from earlier this spring, specifically in April, we haven't really seen any kind of a pullback last that long. It seems like these things are getting shallower, they're getting shorter in duration. If it is the case here, does it still play out that way? And if so, what exactly then goes on shopping lists? I mean, you mentioned your ETF GRNY, Granny Shots. Is there anything that you would be thinking about buying more of? I know that the rebalance is already there, but what?
So we'll get to what Tom Lay thinks about buying in a second, but something that he pointed out there I think is interesting. The dips have gotten really shallow, and part of it is that people just realize that the government's going to come in, or the Fed's going to come in, or someone's going to come in, or they have been at least. Maybe they don't always for the future, but they've been coming in and saving the markets. They try to keep a tight balance, right? They don't want the markets to fall down 30, 40%. So it's been a buying opportunity, really, whenever there's been big dips in the past. And I think that continues. And part of the reason for that, part of the reason that so many bears have a hard time is that we see big jumps like that. We might see a big sell-off, but then it jumps right back, even maybe before, fundamentally, it makes sense for the market to go up so quickly. But the fact is, people have money, and there's nowhere else to put it. It's not like you're getting 6-7% at the bank with CDs or money markets or anything like that. It's not like real estate's cheap. It's not like you want to keep cash laying around. Again, there's just nowhere to put it. So equity markets generally go up. There's very little effort that you have to do to dollar cost average into an index fund. So where do you put all this money, right? Do you just wait year after year for a 30%, 40% crash that hasn't done too well in the past? You put it into markets. So that's why, some people might wait for a 10% drop or 20% drop to throw in a lot more money. Personally, I dollar cost average every single trading day into the markets. And then when we see bigger dips, when we see some juicy dip on a single stock or on an index fund, I'll buy heavier. So I'm kind of that dip buyer that comes in and helps prop up the market. Now, I don't buy enough to actually affect the market, but there are other people like me, and that does end up propping up markets when we see bigger dips.
What kind of stocks actually go and you want to buy on discount here heading to the year end?
Yeah, well, I think it is helpful to think about where we are in the cycle. I know the Fed is a little hesitant. The reason to cut in December, but the reason they're hesitant to cut is the economy is actually pretty healthy, and they just don't have a clear contour of how quickly inflation's cooling. That's a very good backdrop for corporate earnings, actually even corporate earnings to actually start to spread. So if the Fed gives us some guidance and visibility about, path forward, I do think business confidence picks up. That means that ISM starts to recover, and it is a broadening trade. So I would agree with the other speaker that, I like tech structurally because of AI spending, but there's still plenty of room for the small caps to work, which have really taken it in the gut as the Fed's sounded hawkish, and the banks. And so I'd be in sort of favor of a broadening trade as well. But I still like tech. And as you know, the AI trade comes under question every few months. There's always a big pullback, but for the last 5 years, investors have had to buy that pullback.
Ross, we'll give you the final word here.
Okay. A lot of people look at smaller caps as a way to play the Fed, and or they just want diversification. I've looked at small cap indices. I just don't like them. The companies that are in there are some that are profitable, but you look through the top 10 and 5 of them, maybe 6 of them have had sideways earnings, sideways revenue for a half a decade or a decade or something like that. So they're just not very compelling to me compared to big tech. I mean, you look at the top 5 companies in the world and they're growing consistently double digits year after year. They have the biggest cash balances. They have the stickiest business models. So yeah, I think you can't go wrong with big tech on big pullbacks because they're just the safest companies in the world to invest into. Yeah, there might be, some sell-off. Sometimes they get big sell-offs, right? Like Google and Amazon still can fall down 30% from all-time highs. But the companies themselves are very safe and they're money printing machines. Like if Google If Google goes bankrupt, like a lot of people get hurt. Like how many products to use that are owned by Google, right? Or Amazon. Think about how often you use Amazon. Like these are the best companies in the world. They help reduce friction so much and give you so many products and services. They're printing money year after year. They have giant cash piles. They're going to be fine, in my opinion. So, of course, like I have been investing in big tech, every chance I can get, basically over the last 3-4 years, 5 years. Now, Bitcoin, I think, is going to be fine too long-term. Dollar cost average, and you'll be happy. Trade if you want to have like some higher risk, higher reward portion of your portfolio. I still love leverage trading if you use it responsibly, right? Use low leverage. Make sure that you don't get uncomfortable with how much you have in the market, and you'll be fine over time. I have trades that are down right now. Like you can see, down 90% on this trade. Keep in mind, this was something that I rolled. I had 100% gain and over 100% gain, and I rolled it. So really, I'm down less than 90%. But like, yeah, I'm down significantly on some of my trades. But there are also other trades that I'm still up hundreds of percent on. I have other trades on other platforms. Like every exchange that I have linked in the Linktree, I have cash in, or I have trades on. And yeah, you can see here, like I have trades that are from a very long time ago. Bitcoin at 55,000, it's still up 531%. I've taken profits on this throughout the bull run. Same thing with the Sol trade. Same thing with the ETH trade. Like I'm still up significantly on a lot of platforms. BYDFi is just my newest one. So I have the newest trades. So naturally, like if I started trading on it in May, I think. And yeah, we're at the lowest point that we've been at since May. So that makes sense I'd be down. But if you do want to start trading, you can check out BYDFi underneath the video. Again, one of the reasons I like this more than just about every other exchange right now, this is my favorite exchange right now. They continuously give back to people that are trading on the platform. You can trade and gift to $10,000 worth of Bitcoin. This is for everyone that's ever signed up. Also through our Telegram group too. There's someone that we have them in one of the pinned comments that you can reach out to that works at the exchange. I've tried to talk to exchanges before when I've had issues. And even for me, like someone that works with exchanges, sometimes it's hard to actually reach someone. But with BYDFi, you can actually reach out to someone if you have a question or concern. So check out the Telegram, check out BYDFi and the Linktree. Thank you guys so much. Of course, approach the market at your own risk, but I like pullbacks. Why? Because I don't think the indices are going down to zero. I don't think Bitcoin's going down to zero. So if I can buy when it's already on sale, if I can buy it when it's 30% down, right? That's a pretty good risk reward for me. I don't care if we fall another 20%, 30%. I'm looking for the next 4 years, 5 years, 10 years, 20 years down the line. Would I rather buy at all-time highs or rather buy when we have a 30% pullback, 25% pullback? I think the answer to that's pretty easy. Thank you so much. I appreciate it. I'll see y'all soon.